Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Friday, June 11th, 2010. Warning, if you're a bull, you may not want to watch this video. All right, let's set the stage here, okay? Told you go long here. Told you to start shorting here. You didn't have to even trade this. It would pull back and sell off. And sure enough, that's what happened. We told you that was the peak. Down she went. Then she bounced back up here. We told you short it. It was easy short. And a lot of people said, no, you're wrong, as they did back in here. And then down we went, and sure enough, we were right. And we're telling you the move's not over, and you need to be shorting any bounce to the upside. We told you that here. We told you at the same time that you would likely see a bounce against this sell signal right here because you'd already sold off down here, and that's what you're seeing. And then sure enough, down she goes to a lower low on the close. Now here we are again. We told you the bounce was more likely to happen, and here we are bouncing. And you've got 2 days now. Note this. See this right here? When this comes back up here, game's over. All right. So you've got between now and then to do whatever you want to do, bulls, and be lucky if she gets up here. Just it doesn't have to, but once it gets up here, that's it. All right. Now, like we said before, we knew this selling was coming. We were able to make a ton of money on it because we look at the chart and we trust the chart. All right. People who get emotional and see up days and think, oh, the market's going up, he's got to be wrong. Look, I'm not a day trader. I have no problem with the bounce. I'm telling you, it's not sustainable. All right. So whoever that guy was that just posted some comment that I was wrong and smart money's buying, let me educate you right quick. Roll on down here. You see that? Yeah, that's called weak volume. And I don't mean to be offensive to anybody, but the only people who are buying right now in this market is dumb money, because smart money's right there. All right, let me show you right quick. Smart money controls a lot of money. They're smart. People give them money. Say, hey, invest it for us. So when they move, you can see them. All right. Smart money is saying this thing is going to sell off. Dumb money is saying this thing is going to rally. Okay. You're buying out there, more power to you, but you're buying from guys who are a bit smarter than you, and these guys right here, yeah, they're selling you the stock because they're shorting. Okay. Now you know. Now, can I prove any of this? Absolutely, or I wouldn't be here, okay? Or I wouldn't have had all this success, all right? So let me show you right quick what's really going on. This is the NASDAQ. We called this one. You can see our calls is on this. And you can see we have the bounce that we talked about. And we have a big old gap down here that's got to come down and fill. We're not too worried about this. Just move to the upside, let it bounce. This is actually your strongest chart going into the peak. So we expect to see strength here, at least short term, and the move to the upside doesn't bother us at all. The thing that told us to look out for the Dow Jones falling further and the S&P falling further and all that stuff was the divergence. Okay, this line right down here, this low point. Let me show it to you again. All right, right there and right there. All right, so we know that right now, looking at this, we have a low point here, low point here, low point here, and low point here. This one's trending down, and this one's trending up, okay? Now that tells us this is a bearish divergence. Price is not to be trusted here. You need to short this because it's going to go lower, right? All right. Now, how did we spot this before the selling happened? Well, we didn't use the MACD divergence. We used the RSI divergence. The RSI is my favorite indicator. It only signals on occasion, but it is not to be toyed with. That thing will kill you, all right? If you fight it, it will slaughter you. Let me show you. Okay, back at the Dow Jones Industrial Average. I'll show you this right quick. The divergence is a very powerful tool technical analysts use all the time. Basically, price tends to lie. It gets overly, optimistic, overly pessimistic, and so forth and so on. But the RSI indicator, it's not as fickle. Okay, so you've got a high point right here, and then a higher high right here. That forms like this. Okay. At the same time, you scroll on down, look at the RSI of those same points. Go on down. Okay. Whoops, where are we going? All right, move on down here. You got a high point here on the RSI and a lower high on the RSI. Okay, so it told us that the high points on the Dow Jones were actually lying to us, and it was rolling over here. And you would have known that had you either A, checked out free website at perfectstockler.com, watched our nightly market analysis, or known how to do this on a chart. Now here's the scary part. This is a long-term chart of the Dow Jones Industrial Average showing you a 4-year time period. Each one of these candlesticks is a week. And if you look closely, you'll find a low point here indicated by this black arrow, and a lower low here, indicated by this black arrow, showing a downtrend. At that same time period, these low points coincide with low points on the chart, okay? So you've got this low point here, this low point here, and it was signaling an uptrend. Price was lying to you. Had you known how to do this, you would have known that and saved yourself a ton of money, right? Right. At this point, you had a low point and a higher low, trending up. Had you known that, even though price was trending lower, you would have been able to buy and see it made a ton of money, all right? Now we've got a low point here, a lower low here, and price is trending higher. Okay, that's another one of those lies, right? So what do you expect to happen? Well, we know what's going to happen. She's going to break down and end up making the RSI right. So we can look right quick and see how this works, and I can give you an exact figure. All right, if this low point coincides with this low point, and this low point is lower than this one, we know that price will fall below this point. So price ends up falling below this point, right? Right. So if our low point here coincides with this low point, and this low point coincides with this higher one, that's not right. It's actually lower than the previous one, so we know price will fall below that level. What does this mean? Well, it means, plain and simple, the Dow Jones Industrial Average will lose 2,123.88 points. You don't have to be a rocket scientist to figure this out, okay? Very simple. You want to bet against it? Hey, you won't be the only person. You won't be the first. You won't be the last. By the end of the day, I will take your money, okay? This same condition is shown on the FTSE. Let's have a look at them. Let's start off looking at the Hang Seng Index. This is the Hong Kong index. You'll notice they failed to break out the previous high, so all we actually have here is a bounce, and it's now rolling over and forming a downtrend. But more importantly, look at the low points here. Let me get the right tools. It's not a tool, that's a brick. All right, low point, lower low, low point, higher low. That's a lie. You're going to break through, okay? You know that already. Here we have the FTSE, London Financial Times Index, exact same condition here, 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 here. Price will do this. Will fall below this level, okay? Here we have the NASDAQ. You notice 2008 situation, 0708 situation. Told you the same exact thing. Ended up breaking down right there, okay? Same situation right there, right there. Okay, and this will break that, okay? So you're going to have the NASDAQ's going to lose about 516 points, okay? The FTSE will lose about 1,000, and the S&P will lose about 216. Yes, it's on the S&P as well. Okay, here we have the S&P. You can see the same trend right there, okay? Everybody's happy. In this particular case back here, the S&P did not show a divergence. It actually followed the trend indicated by the RSI without any divergence whatsoever, lower lows each time, okay? And that was good for them on that. But in this case, it's not doing that, so it's going to end up breaking down. It's surprising a lot of people unless you know how to look for these indicators. There is some good news, though, thus far on all these charts. The RSI indicators is not showing a lower low beyond this low, which means this low should hold. This low right here on the S&P, this low point that we saw back in March of 09, that thus far is going to hold, so we'll be looking for that, okay? Now you know. If you haven't been to our free website at perfectstockalert.com, it's 100% free, and we encourage you to do it. All we ask in return is you refer a friend. Tell somebody, anybody, to check us out, okay? We work our tail off for you to show you the truth in the markets from a fundamental perspective, from a technical perspective. We're making our members tons of money, been calling this market dead on, and you got to love that, okay? If you're not subscribed to our YouTube channel, you need to do that, or I'll hit you with a stick, all right? Awesome. Enjoy your weekend. Check out the disclaimer. The disclaimer. Awesome. Thank you guys for your support. Thank you for referring your friends, subscribing to our YouTube channel. Enjoy your weekend. God bless.